cart the encyclopedia out with me for now. Thanks. All right, let's get back to Wall Street now. The Fed surprised investors about the future of interest rates.
They're staying put for now. Financial analyst Lance Roberts is here to discuss what happened and, of course, what happens next. Good morning to you, Lance. Glad to see you here as always.
Absolutely. Of course, I think the Fed's been using their smartphones way too much. So.
Oh, I'm sure you're
That's
probably right. Well, break it all down for us. So let's start from the beginning. What's going on with this? Were you surprised by this news?
No, not at all, actually, because as you know, I follow the economy very, very closely, and so I do a lot of the analysis, and economic data has been weakening now for the past quarter. It's actually, out of the last 27 reports we've had economically, we've missed every one of them. So the data has already been weakening. So not a surprise yesterday that the Federal Reserve came out and actually lowered their economic forecast by another 0.5% for this year in terms of growth rate. We're now down around 2% growth for this year, about where we've been really since the financial crisis.
So what happened was that Fed Chairwoman Janet Yellen came out of a two-day meeting, right, and every word, every syllable, people analyzed. So they were waiting. Does she use the word, "We're going to remain patient"?
Right.
Because that's been the key word for no interest rate hikes. She dropped the word patient, but basically signaled, you know what, we're not pleased. We're going to keep it right where we are for a while.
Yeah, here's the problem. I think the Fed's really caught in a conundrum at this point, because economically, the reason that the Federal Reserve raises interest rates is to slow economic growth, and that way we don't get a lot of inflationary pressures that are bad for consumers. But how are you going to raise interest rates when you have an economy that's slowing down? You have inflation at 0.6% growth in terms of inflation. There's no reason. So why would the Fed want to even signal they're going to raise rates at this point? Well, the reason is that we're now 6 years into an economic recovery, the 5th longest on record going back to 1850. So it's a very long period. So the Fed is scared right now that if we happen to slip into a recession, at zero interest rates, they have absolutely no ability to lower rates to try to help stabilize a recessionary drag. So they're kind of caught between this lesser of two evils. I raise interest rates, potentially cause a recession, or I get caught in a recession with zero interest rates and have no ability to help. So I think that's their real problem here.
You know what everyone does is they want to know, okay, so if they didn't go up now, when is it going to happen? Right. I mean, is there any way to forecast that? And then what happens at that point? How does that affect our economy when they do?
Well, again, so the reason we raise interest rates is it slows economic growth. Why does that happen? Because all of our borrowing costs go up. Your mortgage rate goes up. Your variable credit card rates go up. That means more money going to interest payments, less to spend on disposables. And of course, we've already had negative retail sales 3 months in a row. That hasn't happened since 2008. So, you know, there's a real concern here about what's happening with consumers. So I don't think the Fed will raise interest rates anytime this year. They've already kind of pushed the window out to September. I think as we get there, they're going to push it out to the end of this year, unless for some reason we see a real pickup economically here in the U.S. But with China slowing down, they're headed towards recession. Japan's in a recession. Europe's flat. Those deflationary pressures are weighing on America, especially with the strong dollar. That's been reducing exports, making our economy weaker here as well.
All right, Lance Roberts, as always, we appreciate the wisdom.
That's probably too much, wasn't it?
No, I think it's
I followed every syllable. Thanks, Lance.
Thanks,
appreciate it. All right, 9:42 this